All right, y'all. This is Casey Solari,
Travis Solari.
and we're both with Key Realty, and this is
Lindsey Kneupper with Thrive Mortgage.
And she's our dear friend too, so we love her dearly, and we're grateful for her, and we wouldn't send our business anywhere unless our buyers chose someone else.
For some weird reason.
Yes. So we have some questions we posted yesterday, and we'll start with just some basic questions, and then we will end with specific ones that were turned in by friends and family and clients of ours.
Yep.
Sure. So the first question is, what is the minimum down payment for a house?
Right now?
Yeah.
So conventional has a 3% product. FHA has a 3.5% product. So they're very comparable. The biggest difference is what credit score you may have, and the PMI on both of those. So depending on your income, you may fit into the conventional 3%. Where FHA has that more flexibility with debt to income. It has a higher debt to income threshold versus conventional does. FHA is at 56%, where conventional is at 50%.
Wow. Okay.
So depending on if you've got like a first time home buyer that has exceptional credit, low DTI, this might be the best fit for them, going conventional 3% versus a traditional FHA where everyone's like, oh, well, that's what first time home buyers do. It's not
always the case.
No.
Okay. That was new information to me.
That was new to me too. But are you saying that if your credit score is bad, that FHA, or you could have a more negative credit score, that FHA will still keep you at a 3.5%, or they could potentially grow too?
No. So, well, unless you have a 580 credit score or below, yes, FHA does require 10% down.
Okay.
However, just FHA in general is just more flexible in regards to your credit score, where conventional is not. We've got that 620 minimum that we can do. We can't go below that, where FHA has more flexibility on even just what's on your credit score.
Now, you mentioned PMI, but there's also the mortgage insurance might be a factor, right? Whereas if some people do have the ability to throw a bigger down payment, maybe they might want to go conventional just to get rid of the mortgage insurance.
Sure.
Okay, so how does that work? Yeah,
and to go back to FHA, so if you've got, the good thing about FHA and the mortgage insurance is it's fixed. So it doesn't really matter if you're at a 580 or you're at a 700 on FHA, it's fixed. So that's a nice little advantage on FHA in regards to not, being, I guess, at a disadvantage for having the bad score.
Right.
It's fixed for PMI. Unlike conventional, where it's extremely driven on your credit score. So your mortgage insurance rate is driven on that credit score and DTI.
Right.
Wow. Okay.
Yeah.
And you said 620 for conventional. And what was it for an FHA?
580, but we do have investors that will go below that.
Wow. That's cool. That gives hope to people that maybe have a lower credit score.
But back to the conventional, where that, the myth of everyone thinking they had to put 20% down to get around mortgage insurance. Well, that's not true. There is lots of different ways to skin a cat in regards to that. So we've got what's called lender paid PMI, split premium, and upfront single premium options. So they can put as little as 5% down and do a single premium to cover and prepay mortgage insurance, if you will, so that it's a one and done fee at closing versus putting 20% down. Wow. I mean, that could save them 10% right then and there.
Yeah, that's
but
great.
The only thing I would say is, like, in this current market, like, we're prepaying things and we're buying down the rate, unless a third party is covering that expense, it may not be
worthwhile.
Right. Yeah. Because we're in such a refinance potential boom.
Right.
And you don't want to put so much cash into this if you're going to be refinancing.
Right. And that's why that dorky saying about dating your mortgage rate is a thing.
Yeah.
Right?
Date the rate.
Okay.
Marry the house.
Yeah. That's right.
It's real. It is real. So that's why, like, these temporary bind downs are very catchy right now.
Right.
Yeah. But third parties have to pay them.
Yeah.
Okay.
Buyers can't pay them.
See, now this is a great topic of why it's so important to have establish a relationship with a loan officer.
Right.
Because a lot of times people come to real estate agents and ask these questions, and that information is new to me.
Yeah.
And
it's not our expertise.
No. I mean, we know a lot. Obviously, we're in it all the time.
Yeah.
But I think it's really important for people to have, hey, maybe you should talk to a loan officer and get this information direct from the source, because you're going to be working with them as much as you're working with us.
Absolutely. And everybody's financial situation or goals are different. Yeah. So it's our job to kind of sit down and do the nerdy math and stuff and decide, like,
I'm serious. I'm
Yeah,
serious.
that's my job to determine,
Yeah.
based on your goals, yes, this may get you to the finish line,
Yeah.
but we need to go beyond the finish line. Like, I don't want to just get you to the closing table. We need to make sure that we spend, if we're going to spend your money,
Right.
we're going to spend it wisely.
Right.
And so a lot of times I have people wanting to put 20, 30% down, and I ask them, like, what is your goal here? Is your goal to have the certain amount of budget every single month that you look at? I only want this monthly payment. This is my out every single month, when I'm budgeting and looking at my spreadsheets and Excels that I make. And I just look at all their expenses, and, we get so focused on the mortgage payment while we're
Right.
buying a house. But who doesn't have other debts?
Yeah.
Car
We got
payments,
student loans,
yeah.
car payments, credit cards, all these other, debts that, yes, are helping us build credit. That's a whole different topic. But I always ask, like, when you're wanting to put so much down on a house, like, maybe that's not the best place for it to achieve your goals.
Right.
Because what's odd is like every $1,000 that you put down on a house is like $10, $11 on your payment.
Right?
Yeah.
It's not much bang for your money. And so you've got these auto bill, loans that people have. They've got like $20,000 out for a $600 payment. Well, $20,000 on a house isn't going to give me the $500 swing. That's putting it towards the auto.
Yeah.
And now I've achieved a better grasp on your, like, helping you with your financial goals versus putting it towards something that you won't see for a while.
So we're talking, even if you were, like, if I were a potential client of yours, I could reach out to you 6 months, a year out, and say, hey,
This is where I want to be.
I'd like to buy a house in a year or two.
What do I need to do in the meantime?
Right. So maybe doing that would be beneficial to speak to a loan officer way ahead of time
Right.
and kind of help you navigate those roads of what do I need to do? What credit should I be fixing?
Sure.
Versus, well, I just need to save a whole bunch of money, put a big down payment down.
Yeah. Kind of like when y'all decide how to find the sphere of how to put them on a drip, right? What area of town based on their budget. Same for us is like when we meet somebody and we're like, they're not a today buyer. Here's the game plan or monopoly board to follow in regards to how to get from go, and all the way around the board of how to get to your goal.
This reminds me of my sweet conversation with Gloria, because you've talked to her so many times, but you helped her with a game plan, and she knows what she's looking for.
Sure.
So,
yeah. And this market's not for everybody.
Right.
So if you can qualify, then move forward in this market, because the equity position you're putting yourself in is going to be beneficial to you tenfold.
It's still your investment.
Yes. But this whole forcing it down, like where it's stop paying the landlords, mortgages and stuff like that, and making people feel bad about being renters is just,
that was one of the questions I had for you.
Because it's just,
it might be best for them.
Everybody. It might be best for them in today, and then they're putting themselves in a better position when they are ready.
Right.
For whatever's going on in their life.
I think that shows your heart, because in our industry, it's like, no, I want them to buy. I want to make a commission.
Sure. Yeah.
But that's not our desire either. To put them in a place where they're overextended.
No.
Everything needs to be organic. It needs to feel good.
If we were salesmen, I wouldn't be sweating right now.
Oh, I know.
Okay. No. Let's see. So that's question number one we answered.
Well, I was just going to go off of the equity thing, but Lindsey was saying, if you are in a position, everybody knows this market isn't the best, right? But if you are in a position to buy a home, the equity position that you're putting yourself in is still better than renting a home.
If you're financially able to, and it's not overextending.
That's right. Yes,
I
just wanted to make that.
Absolutely. How from last year to this year, I know 2019 to 2021, it was 9% to 21%, which was a huge jump in equity, in our market.
Right.
And that we're probably never going to see that again. I think normal is 6 to 9% or something like that. I mean, that's what they're missing out on. So everyone's so focused on the interest rate today versus focusing on what they're missing on that investment, because the interest rate will come down in a year or two. They will be able to control that, right? But they're losing out that equity that they'd be building
in the time
passing by. Yeah. So, that's just something people have to consider, but it's not for everybody.
No.
Not everybody wants to conceptualize that and is ready for that kind of conversation.
Or financially should, maybe it'd be
make more put their family in a hardship, or put them in a hardship if they
which
jump
wouldn't
the gun.
be worth it.
Yeah. Especially if you're moving, you're already in a home that you bought past 5 years, let's say.
Where the interest rate was much lower.
Lower, and sales price point was lower. And now you're having to get out of that and move to a higher sales price point. But if you have that equity to help you, in the end, it will be a better strategy.
Okay. Because it's cash in their pocket.
Right.
Yeah.
Mhm.
Okay. So you answered the minimum credit score for us. And then let's see here. It says, if a buyer is concerned about if they qualify, are you able to help them with a game plan, which you are? What is the interest rate today?
Oh, that's such a vague question.
This minute.
That's like the question every lender hates being asked.
Yeah.
But I mean, in general, anywhere from high 6s for FHA
Okay.
and VA to mid 7s
Okay.
for conventional.
With the potential to buy down, but buy down's not always the wisest decision, and you can help them with that.
Yes. And
Okay.
depending on how much you put down on conventional, we've seen a 6 in front of it, of course. And we're seeing the trend in the past couple weeks. The market has gotten so much better. So if you're already locked in, I would highly
Yay.
recommend talking to your lender and
Yes.
seeing if there's any movement there that you could take advantage of.
Mhm.
Yeah.
Okay. If a buyer pinpoints a home that is realistic for them and they love it, can you help them come up with a almost penny amount of how much they're going to owe out of pocket and what their mortgage payments going to look like?
Yes. If you're pre-approved with the lender, you need to constantly be having that conversation in regards to where they are in buying. So if you pre-approved them April 1st, you need to be still talking to them every single week to make sure that they're still in range for pre-approval, because interest rates are changing so much that could affect how much they can actually
Qualify
buy
for.
and how much y'all are out there shopping with them
Right.
for.
Mhm.
As the rates get lower, they can probably shop for more. If the
Mhm.
rates continue, if they rise again,
Then less
yeah.
budget. Okay.
So we want to make sure that we present them with a payment and an estimate so they know exactly what to expect. And every lender, when you pre-approve someone, that should be the first thing you give to them. They
Mhm.
shouldn't be shocked.
Is
showing
where you
up-
feel comfortable.
Yeah,
Okay.
well, you're showing them houses. They shouldn't be like, I had no idea the payment would be this.
Right.
Like,
Right.
and then they're back at square one, and
Yeah.
you're like, I just
Again,
wasted
why
gas.
it's so
Right.
important to have a relationship with your lender.
That's right. And the taxes fluctuate so much
Yes.
that whenever we're looking for a home, we send you one that they're truly considering and say, can you tell me the specific mortgage payment on this house?
Yes.
And you use the property taxes and all of the specific
Absolutely.
information to.
For that zip code, that area, that neighborhood,
Which is a beautiful
HOA,
thing.
all the things.
That's why when we get to closing, I'm like, on the closing disclosure, are these numbers what you expected them to be?
Yeah.
If they ever said no, I would just simply pass out.
Yeah.
But they're every time they're like, yes,
Yeah.
that's exactly what I was
That's
expecting.
exactly
It
it to be.
shouldn't be a shock at closing.
No,
Yeah,
my
no.
goodness.
Good Lord Almighty. No.
Yes.
Yeah. Yeah.
But have you noticed property taxes did go down?
Yes, they
y'all
did.
see
Yeah,
it?
yes, yeah,
Yeah.
it did, yeah.
Um,
But
Let's see how
still
long
fighting them, and
yeah.
you should
Oh,
still
sick,
fight.
yes.
Yes,
we're gonna post this
Yes.
later, but we just finished up because Lindsay helped us with our home purchase,
Yes.
with our investment purchase,
right.
and then you even helped us navigate Rockport purchase, which
Mhm.
is towards the coast. But yeah, I mean the taxes are insane, and we're
Yeah.
gonna post this later, but we'll help you protest your taxes.
Yeah.
We just
Yes.
finished, and it gave us a headache, but now we know how to do it
Right.
very
Yeah,
well.
yeah, very well.
So.
Well, because we did 3 of them. But I will
Yeah.
I will say that even though the taxes did go down a little bit, they're still way higher.
Oh, the assessed value.
Yes.
Yeah,
Assessed
they're
value.
giving.
Yeah,
high,
the
yeah.
assessed value has jumped so much over the past 3 years.
Yeah.
One of our very few investment properties jumped 30,000 in 1 year.
Yeah.
Wow.
Since 2019, it was a
Yeah.
69%.
It's 64%
Yeah.
increase.
Right.
And so, and the thing to think about with, especially when you're dealing with taxes, is that is a huge modifier in your monthly payment.
Oh,
You
absolutely.
know, like a lot of times people say, oh, this is what my monthly payment's going to be right now.
Mm-hmm.
And then next year,
Even though
when-
your interest rate is fixed.
yeah, interest rate's fixed and your loan's not going to change.
Yeah.
The thing that is going to change, well, insurance might change.
Oh, yeah. it's-
Insurance has been
Going
going
up
up.
as
We've
well.
been seeing that.
Mhm.
And taxes go up.
Right.
And so when those things go up, you have to at least prepare. That has to be a conversation.
Especially with new
Right.
builds, because new builds are only like assessed on the land itself.
Mhm.
And
Uh-huh.
so come year 2 and 3, it's like a total shock.
Oh, yeah.
Yeah.
Improved versus unimproved.
It
Right.
shouldn't be a total shock, and that's why you have a loan officer.
Yeah, and hopefully the builders discuss that with you.
Yeah.
But if not, that needs to be something that you talk about, because as soon as taxes go up, I mean, we've seen people that have lived in their home for 10, 20 years.
Oh, yeah.
And now they're priced out of their own home
Mm-hmm.
because their taxes went up so much.
Well, and they probably didn't know that they could,
They can
protest
protest it.
them. Like,
Mhm.
Exactly.
Yes.
And it's really not, I mean, it's like kind of complicated, but it's not rocket science.
Mhm.
It's just this process that you have to go through to make sure you do it
Mhm.
you have
right.
to do their job for them.
Yeah.
Exactly.
To
Oh,
present
oh,
all the
yeah,
information
yeah,
so they're
yeah.
like, oh, okay, yeah,
Yeah.
you're right.
Well, I mean, and a lot
That's
of
right.
people don't know that that part of the home buying process, that after you buy a home, then you fill out my homeowners, then you fill out your your all of your deductions for
Your
tax,
homestead exemption,
all
yeah.
the exemptions that you can qualify for. So, and we can help you walk through that process too, but that's not something that happens during the home buying process.
Right.
This conversation just makes me like realize how important it is to have experts in the.
Yes, that's
you know.
why I feel like the whole NAR stuff.
Yeah.
If we want to move into that,
We are. That's next. Yeah.
That's next,
is it's there's never not going to be a need for a real estate
Yeah.
agent.
Right.
It's,
Or a loan officer, or inspectors,
Right.
or appraisers.
You're going to find loan officers that aren't willing to work on a transaction if there
Mhm.
aren't a real estate agent
That's
involved
right.
because we can't take on that risk. There's a lot of liability involved when we're having to answer questions that are in y'all's lane.
And vice
We
versa.
don't have a license for.
Right.
Yeah.
And vice versa.
Yeah, vice versa.
Yeah, and so, and just real quickly, I want to, because a lot of people don't know this, I've figured out as I've been addressing it. The NAR stands for National Association of Realtors, and there was a lawsuit that just came through this year where a bunch of changes are going to have to take place in the fall of this year.
Not necessarily in the fall, but starting in July and really hitting the ground in August.
In August,
Yeah.
and then hitting the MLS in September.
Right.
Is that these changes are going to affect how buyer representation is affected more so than anything else.
Mhm.
But it's a kind of a well-oiled machine. You put a kink in one of the cogs of this wheel, and it's really going to see it's kind of a tumbling effect. And so, I mean, before we kind of start hitting into it, I just wanted everyone to know kind of what that was and what the lawsuit means. And we're going to maybe go into more detail about it in future videos. But
because it's like, it's happening right in front of our
I
eyes.
mean, the changes are happening every day.
Yeah.
But as we're seeing it right now, and kind of what you were talking about is the effect that the NAR settlement is going to have on buyer representation.
Mhm.
And so how do you see that being affected in the financing world?
Luckily, investors have already come forward in regards to HUD and Fannie Mae of saying, you know what, we're not going to have the buyer's representation and commissions affect like third-party contributions.
Mhm.
So that helps because initially everybody was like, oh, well, then we're just going to have to ask the seller to cover it, right?
Mhm.
But then what do we do with these buyers who need the closing cost coverage?
Right.
It's going to mess up that. So luckily that came through. So that was a little bit of a relief or Band-Aid, if you will, till we have larger
More
scale
information.
things
Yeah.
Right.
where it's investors maybe allowing for us to roll in these costs into all these
That's what we were
programs,
talking about on the way up here
lowering
today.
the down payment. Who knows what they could come up with, you know,
Right.
to make this work. But I know, March, NAR mailed, to the VA basically begging to see if there's any way that they can adjust all their restrictions in regards to what veterans are allowed to cover, including the agents' commissions. But that's the most supported program, if you
Mhm.
will, or in our industry, like it's the strictest, product that we have, because there's so much behind our military that, we want to extend
Right.
and make sure that they are getting into homes without being,
Bullied around.
yeah, or just taken
or
advantage
misrepresented.
of,
Yeah.
Mhm.
and so hopefully something will come of that, just like it has already in regards to supporting them. I think it's
Specifically here, though, because
military city.
Yeah, military city. Yeah,
Yeah.
and we close more VA loans than any other loan
Oh,
type.
that's more than half of our
Yeah.
transactions are in even if we're not representing the buyer on the VA, the seller was a VA or the
Oh, yeah.
home was a VA, and so now they're looking for a home, and every time we see transactions like that, we didn't even bat an eye. People, there was some conceptions about or misconceptions about
Misconceptions for sure.
about how I don't know. We've even had some people
VA
say,
appraisers, VA,
That's right.
it's just, it's going to be
"Oh,
hard
I
to do.
can't do VA buyer because their appraisers are so crazy." These are the same appraisers.
Yeah.
These are the same appraisers that go out on a conventional loan or whatever. They're a company of appraisers, and the VA will just ping them and say, "Hey, can you go out and appraise?" And they're like, "Yeah, we do VA appraisals all the time."
Right.
And they'll go out and they're looking for more specific things, but now what we're saying is that a VA in particular does not allow a VA buyer to compensate their agent
Right.
in any way.
Mhm.
So and that has never been a problem before.
Right.
But now with this new NAR settlement coming through, we're potentially going to see some problems, not just with VA because they're not allowed, but a typical home buyer I would say most common, especially in San Antonio, we're a very working class city.
Oh, yeah.
Is that most of the home buyers have saved up enough for their home.
Mm-hmm.
Not any extra added on fees.
Right.
Yeah,
Yeah.
exactly.
Yeah.
Or it'll just take them longer to achieve their
goal
of
of
buying
home
out.
ownership. Yeah. But San Antonio, like we said, is a military city.
Right.
You know, Texas being a good old boy
Yeah.
state, you know, I think with there being a lot of military owners, homeowners, when they're selling here, I think we're going to see that it's not going to be as complicated as we're making it out to be, that the media is making it out to be.
That's
so
right.
Back again, talk to your real estate agent, talk to your lender specifically, because don't read it in the
And praise God for those military men and women, because we wouldn't have the freedom to even have these conversations without them. So.
Yeah.
All right, so then we're moving on to specific ones because we asked our sphere of influence for some questions, and they came through. So I'm so grateful that we have a responsive audience.
Yeah, there's people listening.
So first one is Josie. She's a sweet friend of ours. We love her dearly. And her question was, a home has 4 equal, this sounds like a math problem that you would see on the SAT. A home has 4 equal
A,
owners.
B, C,
yes.
D.
And one wants to buy the others out. All are in agreement to sell their share. How easy is this?
So easy is a very convoluted word to use. But I would say that if all are agreeable to whatever equity share they've agreed to dispose of or disperse, if you will, to the person that wants to remain in control of the asset, it would likely be a cash out, because the funds have to come from the equity into the home to then pay out. For them to maintain it. They'd have to obviously qualify on their own new loan on the new terms to be able to then disperse
over and then take over ownership solely as themselves.
And because they're already on the deed, that's why it becomes a refinance. It's not a straight purchase just because you want to buy people out. If you're already on title and deed, it moves you into a different category.
Okay, that makes sense. And if they all want to sell, then would it be is it similar to like when a husband and wife sell a property and one is on the deed and the other one is not, but it has to disperse equally to both of them?
So that's more community property.
Okay.
But so like it really just depends on the situation. Was the home in a trust?
Okay.
Is it a divorce situation?
Right.
So then like you'd have to get a trust lawyer involved, trust attorney involved if that's the case.
Okay.
So really just
but it's not difficult to navigate. If they come to you, you can direct them to point A.
Oh, absolutely.
Okay.
Yeah.
Cool. That was a good answer. All right. Number 2 comes from Jackie. I've known her since we were little, and her husband are like middle school sweethearts.
Oh.
So super sweet.
Common.
And she experienced a miracle recently, which I can go into later. But are many people still buying properties to rent out, residential properties like family homes in this market? I'll let you answer that, and then I have a follow-up question.
So I haven't had a lot of investment pre-approvals recently, just because the rates are not putting them in a good cash
like
profit margin for having a rental. We are seeing, people investing for their children, right? They're buying it as an investment property, which there is another program for that where you don't have to do it as investment. You don't have to put 20% down.
Because your motive's different.
Right. Okay. So you may not live in it, but you're buying it for somebody else. So there are programs that it's not like we have to put 20% down, but that's a whole nother topic. But like parents are buying for their kids. So it, quote unquote, it's an investment for their money, right?
Right.
But they're also helping out their kids who aren't quite ready to buy. Maybe they're just going off to college or their first house or what have you. Or you're finding people who want to reinvest into the market, like they're ready to move an asset into another asset, like a 1031 exchange, where so they don't have to worry about paying capital gains. They just take the liquidation
capital
of
gains
one.
is paying taxes based on the profit that you get from that property.
When you own a home less than.
But their strategy, if you don't want to pay those capital gains taxes, you can take those monies within a certain timeline and not be taxed on that money.
And this is a 1031 exchange, meaning instead of pulling the money out and I keep it in my pocket, I'm going to use this money into
you don't even get to touch it, Travis.
It
actually stays in a 1031 exchange escrow account.
Right.
You don't even get to touch it, and they pay it directly. So it's a very contractual agreement on like what specific houses they have to close on in a certain time period, and those funds are allocated from one asset to the other. And it's
I call us amateur investors because we don't have like this huge portfolio, but are people like us and I think I know the answer to this question because that's us, but they're just kind of
Because it's us.
watching the interest rate
Yeah.
to see how things are going to play out in the next
Yeah.
6
Y'all got in at such a great time.
I know,
when you
yeah.
did invest
Mhm.
that you have so much equity to then decide, how do I want to move that? Like
Mhm.
for you, like you may decide like Rockport no longer suits us.
Right.
Maybe we want to move to a lake house, or maybe
Yeah.
we want it in another state.
So that's a perfect
Blah, blah,
example
blah.
of selling that, putting
Mhm.
those monies into a exchange,
Mhm.
and then purchasing something else within that timeline and
Yeah.
not paying capital
Now,
gains taxes.
you could potentially buy 2 properties.
You said up to 5?
Yeah,
right?
so up to
Okay.
5. You can designate up to 5.
Mm.
But you just had to add more paperwork when you go beyond 3.
Okay.
But so you have to designate those properties within a certain period on the contract. Each 1031 exchange company, it's like run by attorneys, all have different
Mhm.
agreements in regards to how long that time frame is.
Right.
And then you have up to 180 days to close within that.
Okay.
Mhm.
Again,
window.
it sounds overwhelming when you're not in it, but when you're in it, it doesn't sound complicated to you. You can help them walk through it.
No, there's lots of loan officers that can do this
Okay.
in our office.
Okay, good.
Yeah.
I was going to say, who are you trying
I'm
to...
not trying to tell anybody else to drive, but no.
All right.
I'll
and
give
then
myself extra work.
her follow-up question was also, with that in mind, is it a better idea? So this is one that I think we can answer, but I'm going to read it out loud anyways. She said, also with that in mind, is it a better idea to buy a cheaper property in a less desirable area, or buy a property that's more expensive in a popular neighborhood?
I guess really the biggest difference there, other than the costs associated, are going to be your tenant quality
Right?
Mm.
and sphere
And-
of who's
Yeah.
how frequent you could have that rented, and at what level.
Right.
Mhm.
Which we can pull the comparables on that as well, on the
Mhm.
rental market, and
Yeah.
how much the rate is and things. But I wanted to just very quickly and not go off on a tangent.
She's telling that to me. Yeah.
Yes, but our house
There's
that
a
we
lot I
have,
can say.
our investment house that we have in Rockport is like more fancy and kind of bougie-ish in our opinion.
Well, it's also a short-term Airbnb rental.
Right. It could be long-term.
It could be. We just don't have it set up that way.
Right. But that one's really easy because the neighborhood's really clean and well
Mhm.
kept and has all these really cool amenities. And then our other property that we have here in Spring Branch is
Close to Kenyon.
on Rebecca Creek.
Mhm.
The house is nice and it's solid and
Yeah.
everything about it's really beautiful, but the area surrounding it is a little bit rough,
Right.
with stuff in the front yard, and so all of those things play into whether it's a wise investment or not. I still think we did fine because the interest rate was low at the time.
Mhm.
But there's a lot of things to consider. So
Like HOA.
yeah,
Like, does this community have an HOA?
that's
What are
going
the
to keep people
restrictions?
in
Yeah.
line.
Well,
Yeah.
I mean, you like, for example, if you were thinking about buying an investment property, the other than so many aspects of it being, well, financially doesn't make sense. What kind of tenants can I put in here? Because if I buy a higher end home, then the likelihood of you having a lower credit score person in the higher end home is more in your favor, I would say. Or if you buy a lower end home, knowing that you might have a lower credit score person renting this property, is going to affect that. Or do I want to have a short-term rental?
Mhm.
And are they
Is
even
this-
allowed?
Yeah,
Right.
and are they allowed? Oh, that's super critical. There are a lot of HOAs, even POAs, that will restrict a certain property from even allowing it to go
Mhm.
short term, and
Because they believe it affects their overall value.
property
market value,
values,
yeah.
for their community.
Right.
So for one, that we have to make sure that if you're buying an investment property, okay, well, we got to make sure that this area will even allow it. One. Number two is property management.
Yeah.
A lot of people don't know this, but if you do get into the rental game, a lot of people are going to first think, well, I can do property management on
But there's
my
a
own.
lot more that goes into it. So for us, when they're close, we can manage it just fine. But if it's
Yeah.
further away by like an hour or two or more,
Yeah, now
then
there's,
it makes more sense to hire a management company, which we have a great.
we do.
Especially
Yeah.
if it's not being rented.
That's right.
Oh, yeah.
Because
Yeah.
what if there's a leak
Yeah,
Yeah.
exactly.
and you
Right.
don't go down there
To
and-
check
That's
on it
right,
or
yeah.
Absolutely.
That 100%, yeah. Or, oh my gosh, there's so many factors. And I'm not going to go off on a big
All right, last
tangent.
one.
I could.
It's not allowed.
No.
No, I promise. Yeah, and if you are going to management, there's a bunch of tools and programs available. So if that's something you're thinking about, you want to get into property management and you want to do it yourself, let us know. We can point you at least in the right direction.
Try to talk you out of it. No, I'm just kidding.
No, everyone's trying to save,
that's
dollars here and there.
Yeah.
But sometimes it's a wise investment. And
Yeah, just like
Yeah.
using a real estate agent to buy a home, a property management company knows how to manage
a
property.
house. Yeah.
So that's just something to think about.
Okay, very good. And I know we touched on these last two, but because they were submitted by people, we'll just touch on them one more time.
Them to
Okay,
know.
that's right.
Brittany has a question.
Yeah, she does. So I also love her very much. This one says, are there any other ways of avoiding PMI if you don't have 20% down for a conventional loan?
Mm-hmm. Yeah.
Yes. So, yes, right? We said 20% down. You can either just do the flat 20% down if you have no other debts, and we shouldn't be looking at a bigger picture. And if, you're in this current market and you don't want to prepay mortgage insurance, but you do have the ability to take advantage of the split premium the lender paid and the single premium up front if you want to.
Okay, which sounds complicated, but you'll break it down for her if she calls you directly.
Absolutely.
Okay. And then the last question, is, what are the factors that should be considered in deciding whether or not it's best to put 20% or any percentage down at that time of purchase? And this is from Brooke. We met super sweetly, and she's done a couple of deals with us. So if you can offer insight into that.
So it's kind of like there's not like one size fits all, right? There's not one house that just fits every single one of your clients that are looking at the same time. Same thing for loans is like this one loan's not going to fit everybody.
It's like a fingerprint. It's super unique to them.
Mm-hmm.
Yeah.
That's why we sit down, we have conversation, we get to know these people. You get to find out exactly what their goals are so we can make sure that all this money that they saved and truly like we're planning, for this house doesn't have to go to waste.
Yeah. Or not to go to something that's effective
Well,
and that's going to help them long term.
I'll also add, and I know that because we've already kind of touched on that earlier, I'll also add that, and we've seen this in the past, is don't hide your finances, right? I mean, I know...
We will find out.
Yeah, we are going to find out eventually, and it's usually not very nice when we find out. But...
To be an open book.
Yeah, to be an open book. And I know it seems very personal, but so is buying a home.
Yes.
It's a personal,
it's an emotional
process. It's just business. It might be business if you're BlackRock, okay? But if you're a regular person or you're new to the investment game or you only have a couple investments, it's still a personal purchase for you.
Right.
So don't withhold. The reason I say it is because we had a personal issue with a property that they didn't tell us about another lien that they had on their home when they were trying to sell it.
And we were able to work it out, but we were like
last minute, just like all kinds of weird, crazy.
And our title company.
MacGyvering everything.
Yes, yeah. And their lender had to go through a huge process. I mean, it was just...
Exactly. MacGyvering is a perfect term for
Yeah. We have MacGyvering.
If you're old enough to know who that
is. So what I mean to say is the more you share, the easier it is for us as realtors, especially loan officers. It's easier for us to figure out what is a plan that works for you personally.
It feels vulnerable, but it's vulnerability in like this beautiful way where we can teamwork it because we're not against you in any way.
No.
We're for you. We want to try
It's like the cart before the horse.
Yeah.
Like, you can't have one without the other.
Mm-hmm.
Right.
Like you got a locomotive goes forward, right? And we can't get to your goal unless we pull credit. That's the biggest thing is people are like, but do you have to pull my credit?
Can I just tell you like what's on it maybe?
Do you have to have bank statements? I mean,
yes.
It's not going to hurt their credit score.
All of your bank statements. Yeah.
The answer
Everything.
is yes.
Yes.
If you have to ask the question, likely the answer is
yes. That's right. So what we don't want to be in absence of is joy. So there's joy to be found. We love what we do. I know you love what you do.
Absolutely.
And we love you very much and we're grateful for you. But if you could inspire joy in potential buyers or sellers or investors, what like word of encouragement would you give them? Even though the market seems tumultuous, what is the like underlying beauty here?
Where there's a will, there's a way. That the old saying is like if you want it, we'll help facilitate it.
Right. And make sure all your questions are answered and make sure that you're not overextending yourself in a society that encourages you to overextend yourself. Yeah. Right? The goal is not to do that.
In the words of Thrive, we give closure.
I saw that sign up there.
Yeah,
We're going to take a picture in front of that.
That was great.
Motto over here.
I love that.
And everybody needs closure in relationships and processes and stuff.
Yes, that's so perfect. I love that.
Yeah.
Go ahead.
I was just going to say, kind of going off what you were talking about earlier, if it makes sense for you, let us help you.
Right.
Right? If it doesn't make sense for you, then we'll help you later.
Right.
You know, or come to us now so we can help you later.
But our motives are pure, and I know your motives are pure too. We have no nasty game plan or ill will or anything. We really want what's best for people, because we've been in situations where that wasn't the case, and we've like come from the dredges. We don't want to, put anybody else through any kind of hardships like that.
Yeah.
Absolutely.
Yeah, we've bought houses.
We're not making these mortgage payments.
No.
So we are not forcing anything on somebody else, knowing that that's what you have to take on.
Right.
So,
And for most people, this is the biggest investment they'll have
absolutely.
ever. So we take that to heart.
All right, so we'll visit again maybe?
Yeah.
So use us if you're thinking about buying or selling, and then Lindsey's a good friend of ours at Thrive Mortgage.
Yep, so use Thrive and reach out.
If you have more questions, you know what to do.
Bye.